Hello everybody, welcome back to the Contrarian. For those of you who are new to this channel, my name is Logan. I really love talking about overall success investing, and most of all investing in such a way as to outperform the market in the long term, which fundamentally means being a contrarian. It means going against, at least to one extent or another, what the majority of other investors out there are doing. So that is why I call this channel the Contrarian. But today I really want to answer a lot of the questions that have been raised in the comments over the last several weeks and months of just, what is your forecast for the coming, 6 months to a year, and how are you positioning yourself? So today I'm really going to answer those questions of what I really see happening in this last, 6 months of the year, and then, just the rest of 2021, what I see happening in the remainder of this year. And to summarize, I see a large melt-up coming, if not, that's already here, continuing roughly into the end of this year, and then the beginning of a meltdown in the market. So melt up and then meltdown could summarize it, but I'll go into much more detail than that. And also to summarize my positioning right now, I am still very bullish precious metals and precious metal miners. So that's mainly where I'm positioned right now. So to answer those questions, that's the summary of it. But so I'll go into more depth on the melt up and really why I think that's such a likely outcome right now. And to summarize, it mainly has to do with all of the institutional money that has up until recently been sitting on the sidelines, hundreds of billions of dollars in just cash sitting on the sidelines, and that's a major reason for a coming melt up. And if anything, it's probably getting started just about right now with the recent jobs report for June that came out higher than expected. Even though, if you look into the details, it might not be very bullish. The market oftentimes prices and things like that in a very optimistic manner. So actually, just a couple weeks ago, I made a video alluding to how a jobs report might be the catalyst that does send the market into a coming melt-up. So that would be kind of funny if I ended up predicting that. But anyway, I do think melt-up from here, which the definition of a melt-up is just a extremely quick, volatile move to the upside. Usually you hear the phrase, the market takes the stairs up and the elevator down. A melt-up is kind of a very abnormal occurrence where it's almost like the market takes the elevator up, and then, obviously it does not last for long. It does crash afterwards, but it's very rare to occur. Probably the most recent melt-up that was seen was just in the tech sector back in the 2000 dot-com bubble, just the last parabolic leg it had there. But really, in the broader market, we've not seen a broad market melt-up since arguably the Japan 1989 bubble, and then for the U.S. stock market, not since the 1929 bubble that preluded the Great Depression crash. So a melt-up is extremely rare, but that is what the definition of a melt-up is. So I do see a coming melt-up as being very likely, if not already getting started. Just it would likely start in the next few months if it does end up doing that. If not, I just expect it to continue to rally here until a crash occurs later this year. And you might be wondering, why, Logan, do you think a crash would occur later this year, 2021? And really it has to do with inflation beginning to heat up. We've already seen many inflation reports coming out, much higher than expected inflation. That doesn't surprise me. That I'm sure it doesn't surprise most of you out there, just seeing the actions of the Fed in the last year, the massive monetary stimulus that they've done, monetary supply expansion that has been done. But I really do expect inflation to get out of the Fed's control very soon here. They've already backtracked from 2024 raising rates. Now they've said in 2023 that they would consider raising rates. But that really doesn't make a difference. 2024 and 2023 are still a couple years out at least from now. But I do think eventually inflation, sooner rather than later, is going to force the Fed into QT instead of QE. And, that would be a devastating thing for them to do in terms of the markets. Right now, we've seen what QT did back in late 2018 with the crash right around October through Christmas time. And if anything, the market is extremely more leveraged than it was then, and QT would likely be in the form of hundreds of billions, if not $1 trillion of liquidity being removed from the system, whereas back in later 2018 it was significantly less than that. Obviously, some of you might disagree with me in that and just say that, the Fed will let inflation run as hot as they, want. They don't care about it. I disagree with that. I do think the Fed, I do think Jerome Powell does care how hot inflation gets going. If a report comes out that's, significantly higher than expected and it continues doing that month after month, I do think that that will eventually force the Fed's hand to do QT, and I don't think they quite realize how dramatic of a change that would be for the markets. They might, start doing it, and there might not be much of an effect on the market, and they might do more, and there still might be not much of an effect because there's such a lag in the monetary supply with that. It's taken so long for inflation to get going after the stimulus that's been done. It's likewise going to take much longer than probably they are expecting for QT to actually have an effect on asset prices. And so I do think that a crash right around the end of this year is very, very likely, if not the beginning of 2022. That would be kind of the maximum, risk environment that I would say. But ultimately, I do think that the melt-up will carry us into the top. Where the top is, I don't know. It's kind of a judgment on my end, at least, of looking at where the investor sentiment is. I mainly look at investor sentiment when I want to see where things are likely going, because the markets oftentimes, if not always, move in the opposite direction of where investors are thinking, and that's a very kind of contrarian approach to take. But if you look at past bull markets that we've had, look at past bear markets that we've had, they've always started when investors were either extremely the opposite of what ended up happening. So look back at January, February of 2020. Investors were extremely bullish, and then the market had a massive correction due to COVID. Look just a few months later, in March of 2020, investors were then very bearish, and then the market rallied, close to 100% now. So the market basically always does the opposite of what investors are thinking. And so I would likely say that a top would be very close when, the majority of investors out there are very bullish. So as soon as I start seeing CNBC being extremely bullish on everything, and they're not really having any of these bearish analysts on anymore, and everyone's kind of forgotten about market crash 2021, hype and all that stuff that's been going on about a crash so far, at that point I would become very, a contrarian approach that I would take would be saying that, okay, now at this point, now that everyone's in the market, now that most of the liquidity on the sidelines that has been there can be, is already deployed in the market, at that point I would say that a top is very likely. And at that point it probably is going to roughly coincide with when the Fed is going to have to do QT in terms of inflation running out of control. So that, in a nutshell, is kind of my forecast for the coming 6 months to 1 year from now. For reference, right now is July 4th, 2021, just for the future if people want to reference this back. But in terms of my bullishness on precious metals and precious metal miners, this is also a very contrarian position for me to be having right now, as metals, they did rally off of the March of 2021 lows that they had right around 1700. They ran up to around 1900, and then they corrected very quickly after the Fed's meeting, because they said that they would raise rates, potentially that they would raise rates in 2023 instead of 2024. And then the metals corrected back to around 1750 for gold, and miners did correct heavily from there. But I'm still very bullish on precious metals and precious metal miners, mainly for the reason of the Fed, them changing, potentially raising rates to 2023, 1 year earlier, doesn't affect, in my opinion, what currently is going on, which is inflation really heating up, inflation beginning to run out of control. Ultimately, real rates falling into negative territory. They are already in negative territory, but falling even more into negative territory. That's extremely bullish for gold and precious metals and precious metal miners. Also, they have been a laggard recently, roughly the last year. They've been overlooked basically since last August and September, when they had that really massive rally for gold and silver. So mainly for those reasons, I am still very bullish. The metals and miners, we will ultimately have to see how that does play out, but I'm bullish metals and miners, for the coming 6 months, not necessarily for the coming, meltdown or crash, whatever you want to call it. But I do think that they will perform very well in the long term as well. So that's also why I'm in them. Is even if I don't get out at the top, I'm still very bullish. These companies, these stocks that do mine gold and silver, I'm still very bullish long term. So ultimately, that is a major reason why I have decided to be in them right now. Is I'm just, unlike some of these tech stocks, unlike some of these S&P 500 companies that I think could correct very heavily in the crash, I don't think gold and silver will be hit as hard in the crash, and I also think that they will have a very strong recovery afterwards, likely due to just an extreme, even more, monetary supply expansion that could happen after this crash does occur. So, all of that being said, that is my kind of forecast and my allocation right now for the coming year. So I hope you guys enjoyed this video. If you did, just consider subscribing to this channel if you want to hear more, and consider hitting the like button. That definitely helps the YouTube algorithm. It lets YouTube know that you enjoy hearing what I'm talking about. So all that being said, just consider subscribing to this channel, and I hope to see you again.